Right. Okay. Guys, welcome back. Let's start the class. Continuing the class, right? So, we discussed the whole theories related to the accounting concepts, right? So, I'll give you a quick just summary regarding the 13 accounting concepts. Hope you can remember. Business entity concepts, which means in here we discuss, owner and business, we identify as two different parties, right? So when it comes to the accounting perspective, so then going concern concept means business will long last for foreseeable future. That is the term called for going concern concept. Then as number three, we discuss periodic concept. Means we maintain accounts for different periods. That is the term we call as periodic concept. Then, as number four, we discuss about money measure concept. Money measure concept means we identify things which we can in the measure monetary terms, the accounts. Then accrual concept. We identify income and expenses relevant for the period, right? So then we discuss about after that. Consistency principle, when it comes to the policies, we need to have a same policy over a periods, right? Consistency. Then again, this is substance over form. This is for the least right to use assets. We identify the lease assets and the constructive obligations, right? uh, then realization concept, we identify the revenue according when it earned, right? So the realization concept. Then after that we discuss about matching concept. Matching concept means we match expenses against the income under matching concept. Prudent concept means we need to ensure that the assets and income are not overstated and liability and expenses are not uh, understated. So that's why we made provisions, right? So then we identify income at net realizable, sorry, inventory at the lower value was cost of net realizable value, bad debt, depreciation, inventory valuation, those things we are doing because of this one. Then materiality concept means when we are preparing accounts, we need to concern the things with material. If not, those things are we writing off as expense when it comes to the uh, assets. And also we need to disclose the material things, right? So in the notes at least, right? Then in the financial statements as well. Then historical cost concept, we apply the historical cost, initial cost for some things, but there are some deviations when it comes to revaluation. And when the stock sees when the net realizable value is lower than the cost, it's reaching of the closing stock. Then we discuss about disclosure concept, which means in here we need to disclose everything regarding to the accounts in the when we are preparing the accounts. That is the term called disclosure concept, right? So hope it's clear to you. And I told you there are some occasions where two, three principles, accounting concepts are applying, right? So I gave the note, and I ask you to do a homework uh, like concept, definition, and what are the users. Users means not who are the users, yes, use of the concept. Better to write like the same. use of the concept, right? So better you can draw the chart as a homework and send it to me. Is it clear to you guys? Send me a thumbs up, right? Use of the concept. Is it clear to send me a thumbs up? Better you can draw a chart and send it to me. 2 years of the right. Okay, then let's do some questions in here. I'm going to do only the selected things today. Rest of the things I will discuss later, right? Let's do the number one, right? Since I'm not going to, I'm going to do till a few minutes. Let's do few questions. Then other things I'll discuss another day in the class, right? Select the most appropriate accounting concept for each of the following item. Uh-huh. So they're asking about appropriate concept, right? Classifying assets into current and non-current in the statement of financial position. I told you we classify assets as current and non-current when we apply what? Going concern concept. Going concern concept. Going concern concept. Going concern concept. Right? Next one. Recognize of drawings as a decrease of equity. Owner's contribution we identify separately because of the accounting entity concept. Accounting entity concept. You can write the answers in the book. Measurement of inventories as cost and realizable value, whichever is lower. What is the best thing? Measurement of inventories as cost or net realizable value, which is lower. What is the thing? It because of the prudence concept. Prudence concept. Reach the historical cost concept, but I do this because of the prudence concept. Number 4. Measurement of land at cost in the statement of financial position, because of the historical cost concept. Historical cost concept. Recognition of right to use assets by the lessee, lessee, right? So it's because of what? It's because of the substance over form concept, right? Substance, substance over form concept. Substance over form. Recognition of accrued expenses in the statement of financial position. So it's because of the accrual concept. Accrual concept. Accrual concept. Accrual concept. Next one. Sales revenue is recognized when goods are delivered to customers. What is the answer? Give me 1 minute, guys. right? Uh, okay. Next one. Sales revenues recognized when goods are delivered to customers. What is the answer? It's realization concept. Realization concept. Realization concepts. Right. All the items of the statement of financial position representing a value. What is the one? Money, measurement, concept. Contingent liabilities are disclosed in the notes to financial statements. Disclosure, concept, concept. Use of weighted average cost method for net for value of the cost of inventories over the year. What is the answer? Consistency, consistency, concept. Finish it and raise your hands. Once you finish, raise your hand. Okay. Now, not only here, I told you for some things there are two, three things applying, right? For an example, right? The depreciation, right? You know, when it comes to depreciation, you can write many things in here. I think there's no any depreciation here. Then stocks things are not in recording stocks. So mainly prudency, matching money measure concept, German expenses, income, PPE. Likewise, there are many things we can identify. But in the given scenario, you can have a clear idea, right? So what is the best one? Uh, let's do the second one. Right? Do the second one now. To state the concept. Do the second one. Making a provision of doubtful debt. Mainly, it's because of the prudence concept. Prudent concept, right? But you know, when it comes to the provisions, so mainly it's because of the prudence concept, right? A machine obtains of financing lease being shown under the non-current assets. The statement of financial position. What is the thing? Substance over form concept. Over the assets and liabilities in the statement of financial position has been categorized as current and non-current. What is the answer? You know, it's going, concern, concern. Going, concern, concern. Going, concern, concern. Next one. Accrued expenses and prepaid insurance charges are shown in the statement of financial position as current liabilities and current assets. What is the answer? It is because of the accrual concept. 2000 bad debts has been deducted from debtors and shown an expense. You know, mainly you can write the matching concept. But you know, when it comes to identify the expenses, you can see periodic, accrual, money emission. But the main thing about the matching, right? Uh, Going concern for the second one. No, for the second one, it's about the lease thing. So lease thing goes to substance overflow. right? Number six, the statement of financial position starting uh, that is up to stating that is up to 31st March 2016. So this is periodic concept. The stocks being recorded at lower of cost or net realizable value can write the mainly prudency concept. Starting the business name Silva traded on the top of the statement of financial position, that is business entity concept. A land purchased 5 years ago, 500,000 being shown in the current year's statement of financial position at the value of 500,000. This historical cost concept. Property, plant, and equipment being depreciated annually by 10%. You can write the mainly matching concept, but even you can write, I told you, when it comes to the property, plant, and equipment, you can write going concern concept as well, right? Yeah, mainly depreciation, going concern concept also we can apply. Finish it and raise your hands. Once you finish, make sure to raise your. Right. So let's keep third one to do later. It's just give a try as a home. Fourth one also true false. I'll just jump into some, yeah, big fiction. Do the 13 and 14. I'll give you a few minutes. 13 and 14. There are another new thing you can see, dual aspect concept. It's don't worry about that. 13 and 14. Asking about answer of the fifth one, right? Answer of the fifth one. Yes. Any other? Hopeful would, right? Now do this 13th one. You need to write the accounting concept by selecting the things in here. Right. Let's see the 13, right? Below given accounting concept, uh, below given accounting concepts which are commonly used in accounting practice, we expect students to read carefully and come out with the proper answers, right? Each of the following statement describe one of the accounting concept. You have to select the, there are 9 things. To select the thing relevant to here, required from the above given accounting concept, mention the most appropriate accounting concept for the transaction number 1 to 7. I'm writing the answer, same answer in here, right? Or right in here. Statement of financial position is prepared with carrying value. What is the answer? Statement of financial position is prepared with carrying value. Yes. What is the answer? We can take going concern concept, right? Going concern concept. Going concern. Owner's cash drawings from business is deducted from his or her capital. owner's cash drawings, we deduct because of the entity concept. I'll write it slowly. The accounting concept in determining when to revenue recognize, it's because of the fund done, fund done. Realization concept. The time duration covered by an income statement, it's about periodic concept. Periodic concept. The accounting concept used in determining when expenses should be set off against income. Yes, it is matching concept. Matching concept. Recognize income when it is earned and expenses when it is related to goods or service are consumed, and to obtain the income, it is because of the uh, we can take prudence concept. Stocks should be valued at cost or net realizable value. Is also we can take prudence concept, right? Accruals, historical, dual aspects, no information about. Finish it and raise your hands. Right. Shahan Rosary is employed an accounting trainee to perform basic bookkeeping function, and he gave explanation for the below criteria and transaction which were recorded accordingly. The provide you answers related accounting concept. Just read and tell me the answer. Read accounting concept. Right. Shall we see? Right. Let's see. Uh, right. The owner, Mr. Sahan, now just remember there's a note regarding the lease, right? The owner of Sahan purchased a laptop computer for his personal use for 75,000. Uh-huh. Uh, this is a business of. This was on the opinion of the accounts trainee to record as a non-current assets of his equipment because this was purchased using the business bank account. Uh-huh. So now you know this. All right, this is question number 14.1. 14.1. Now, owner purchase a computer laptop, right, from the business, but this is for personal use, right? Personal use. It's clearly mentioned it's for the personal use. So, according to the business entity concept, we need, since this is a owner's drawing, because he used business money, we can't identify as the business non-current assets. You can write like this. You can write based on based on entity concept, entity concept. This transaction, this transaction should be recorded as should be recorded as owner's personal drawing, personal drawing, and deduct from his capital, equity, because of the entity concept. Clear, you guys? Send me a thumbs up. Right? Next one. Not necessary to record unpaid paid expenses pertaining to the current financial year as this is not paid so far. Uh-huh. So in here it says about not necessary to record unpaid expenses pertaining to the current financial year as it is not paid so far. It's wrong, right? According to the accrual concept, right? As per accrual concept, as per accrual concept, know the concept accrual concept is transaction this transaction we need to record this transaction to be recorded in the books of account, to be recorded books of accounts as they have paid or not. You can write books of accounts uh, whether they have paid or not, whether they have paid Oh no. Number three. Right. Material stocks, including the inventory worth of 75,000, has become obsolete, which has the net realizable value of 45,000. The account trainee have believed that there is no need to record this loss as the inventory are not yet been sold. Uh-huh. So this is regarding the closing stock. Now the cost and the just wait. Right. Now, in here, material included in the inventory 75,000 obsolete. Obsolete means, expired or something, right? Yalpanaki, which has been net realizable value of 75,000. The cost is 75,000. The net realizable value is 45,000. The net realizable value is lesser, right? So the account ready believes that there's no need to record the loss of the inventory are not yet been sold. According to our which principle? According to our according to these 13 things, what is the thing we use? You know, according to the realization concept, right? Sorry, according to the prudence concept, right? Prudence concept, according to the prudence concept, prudence concept, right? According to the prudence concept, the expense or losses are recorded as soon as they occur. Entity must not underestimate its liability or losses. Therefore, loss of rupees 30,000. There's 30,000 loss. The cost was 75,000, but the selling price was uh, they're asking about no need to record the loss. This is regarding the loss, right? 30,000 have to be ac- accounted under other expenses. The income income statement or the profit or loss statement. Land which was the cost of 10 million was acquired 5 years ago. The present market value of the land is around 15 million. The accounting trainee has an opinion to record of the increased value as a profit in the financial statements. Now, there is a revaluation, right? So, because according to the realization concept, we can record the sale. right? So there's a profit. This is related to LKS 16. You will learn under realization concept. Of accounting, the profit can be recorded once the sale is made. Now the sale already done. Sale is occurred, right? You can see, right? So it was already sold. No, it's not already sold. No, the present market value land is 15. The account has piece of the value. Ah, right. No, we can identify the thing. Can write. Therefore, this transaction, transaction cannot be, yeah, just cannot be entered books of accounts. Just okay. They are asking like this. Look here. Now, increase value as a profit. Right, right. Not sold, right? Land cost is 60 million, right? Now it's going to now the present market value 15 million. Uh-huh. So now there is no any information they have revalue it. Now there's a 5,000 increase. Trainee has an opinion to record the increased value as a profit of the finance. No, he can identify as a profit. It is a revaluation reserve, right? It is a separate thing. We will learn it. It's not a profit. It's a revaluation reserve, we call it, right? Later you will learn. Don't worry about that. Learn it and come back. You can have number 6. A business acquired finance motor vehicle costing 4 million on 1st April 2019 for finance list with a down payment of 500 million from a central finance. The interest rate 16% manner. The lease for 4 years with monthly installment 100,000. The account trainee suggests to record the lease transaction as normal cash transaction and record the down payment as expense in the books of account in the income statement as administration expenses. No, this lease thing we can identify as an asset, right? According to substance over form concept, all financial lease sets to be recorded as non-current asset in brackets right to use. Don't worry, we learn in the lease lesson. It's the statement of financial position. Lease interest lease interest is an expense. Is interest to be charged to income statement under finance expense under finance expense. Now the monthly interest, sorry, lease rental. There's a payment monthly. We need to pay some amount apart from the interest. That value we deduct from the lease creditor. Monthly lease rental to be deducted from lease creditors. Right? Finish it and raise your hands. Once you need any clarification. Waiting for raised hands. If you need any support, let me know. Now in this tude, I have done the major concerns. Now only the MCQs and the other things pending. We can finish it within 1 hour. Send me a thumbs up. I think we can finish this within 1 hour, right? My plan is to finish this on next Sunday. Within taking 1 hour, I'll finish it. The things. Not Sunday, I'll explain it to you when I can do it. When time permits, I'll take it. So this is enough for today. We did nearly like 4 hours, nearly 4 hours from 10 a.m. So I gave my best. So you need to draw this chart as a summary. Then you can have a clear idea. Then you can learn it. So make sure to do this one as well. I mean, like draw your own map and send it to me as well, right? Including all the users and the definition related to those things, right? Okay. Thank you for the participation. Bye.